Hello friends, this is your host Rakesh Kumar. In the previous video we had seen the continuation patterns which were called flags. They are common in uptrends and the downtrends. Now in this video we are going to talk about the pennants, which are also continuation patterns and forms somewhere in between, somewhere in the midway between the trends. They can be uptrends or the downtrends. More about the pennants in the video. Just to remind you that if you have not subscribed to our channel yet, then you can subscribe to it now to get the notifications of the latest video uploads. And if you find this video useful for you, then consider pressing the like button, which is below the video.
But before we begin, let us have a look at the risk disclaimer.
It states that the futures, stocks and the options trading involve substantial amount of risk. Your capital is at risk, the losses can exceed the investment. The information is provided as is, and the user of the information assumes the entire risk of any use it may make or permit to be made. So let's get started.
As I just mentioned, that pennants are small duration, the patterns of a very small duration, and they occur in the midway of the trends generally. Now if I say I am talking about the pennant, if I am talking about pennants, that means if there was a sharp move, if there was an uptrend, then there will be a small formation like this, which will be for a very small duration, and then after this the trend will continue in its own direction. Okay, like this. So this small pattern here refers to pennant, but this is just a general idea. But how this pattern is formed, that is what we are going to see. So what are the essential ingredients that will make a pennant? So first of all, we need a sharp up move. Just like in case of the flags, we needed a sharp move in the direction of the trend. So if there is a trend, if the security or the currency pair which you are watching has moved very fast in one direction, okay, only in 3 to 4 candles or 5 to 6 candles, then that is called a very sharp move, as compared to if the security was, say, trading in the previous time like this. Security was trading like this, okay, and then suddenly it started moving up. So this is called sharp move upwards. Okay, now this is the first requirement for a pennant to form. Now the second thing that we need in the pennant formation is a flagpole. Now the move from this low here, from where the move started, to the height or to the high which is formed in this sharp move is called flagpole. Now after this, the pair starts moving in the form of a triangle like this. Now if you know, earlier in the earlier times, this word is coming from the past. The pennant is the flag which is triangular in shape, and it was in the ancient times it was hoisted on the masts of the ships. So that is where from the name has been taken. It is called pennant. It is a triangular flag. It is in the form of a symmetrical triangle mostly, or otherwise it is in the form of this form. Okay, so essentially it has to be a triangle. It can be a symmetrical triangle, it can be a right angle triangle, it can be any type of triangle, but it has to be a triangle, and it has to have an apex. So the price tends to converge and finally break out in one direction, and when it breaks in the direction of the trend, that is, it is a confirmed pennant. To show you more, we had a flagpole and then we had a flag. Now this flag, you can replace this name as a pennant also. That small flag around that place, this small flag, triangular flag, is called a pennant. Okay, After that you need a break. The break, in this case we need the break only in the direction of the trend. If the sharp move was on the upward direction, then this move should also be in the upward direction. That breakout should be in the upward direction. Generally the break happens here and the price tends to come back to this region, but it does not necessarily come back. It may come back or may not come back also, so you don't expect it will always come back, no, but yes, most of the time it comes back. So that is the time when you have to enter a buy trade and then go for the targets. Now what will be the target, friends? It is very easy for this pattern. The targets for this pattern is the height of the pole. So you just measure this and then clone it and then move it upwards. Okay, from the breaking point, this is the breaking point, so this will be a target for this. It is very simple pattern to understand. I hope you got it. First there was a small trend, then there was a sharp move in the direction of the trend, then there was some consolidation in the form of a triangle, then there was finally a breakout, and this happened. So now what we are expecting, we are expecting the price to reach this height in the due course of time, and it actually happens very fast. This price is taken very fast, this target is taken very fast. Okay, but if we talk about the downtrend, then how it will be? Let us see what happens in the case of a downtrend. In the case of a downtrend, we will have a sideways move first or somewhat in the downtrend, and then there will be a sudden move like this. Okay, now this sudden move is called the flagpole. Sometimes this move is like this, sometimes this move is so brisk that it is covered in 1 or 2 candles only. And after this move happens, there forms a triangle which is in the opposite direction to the trend. This is same for the uptrend also, and the price starts moving like this. Okay, I am showing you only 2 highs and lows, but this can be 3 or 4 also, but not for very long. If this continues to be very long time, then it is not 2. Okay, then finally it breaks here, and then starts moving in the same direction. So this particular place here is a pennant. This is the height of the pennant. From here we will see that this is the height of the pennant, and this height of the pennant is actually used to measure the targets. We'll just clone it and place it at the breaking point. Now this is breaking point. From here we will measure the targets. Now this is a textbook, so you may be thinking that okay, it is very easy to trade, but in actual market it is somewhat different. You will always not get the textbook trades in the real market. So this becomes your target, this becomes the breaking point, this is the retest point, this is the retest point, here is your buy, not buy, sorry, this will be your short selling area. And this will be your stop loss. Okay, so this is it. I hope you have understood. If you have still any questions, then you can ask me in the comment section. And in the next video we will try to explain you this pennants with the help of a few examples from the live market or from the real market. Till then, thank you very much, and I hope you liked this video. Don't forget to press that thumbs up. We'll see you in the next video. Thank you very much.